Hello and welcome back to Young and Visionary. You're with me, Esnat Suleiman, and in this episode, I'll be talking about how to invest in shares. Now, I know that there are others who have never heard about shares. Others have, others are already investing, but this episode is more or less a basic episode that explains how you can actually start to invest in the stock market, especially if you have not had any experience in the past. Now, shares are a great investment to add to your portfolio, especially if you are investing long term. So you could be investing for retirement, or perhaps maybe you're simply investing for your child's education. Your child is in primary school and you're looking forward to the time that they'll be going to university, and you want to make sure that you're prepared for it and that your child will get the best education. So you can actually add shares to that portfolio. Shares are a unit of ownership in a company. So if you buy shares in a business, you actually become a part shareholder in that business, meaning that you will benefit from anything positive that happens in the business, but you're also taking risk in the negatives that can happen in that business. So how you choose your shares is actually a very important aspect, and I will talk about this in a later episode. Now, when you do become a shareholder, you will not be involved in the day-to-day management of the business. Obviously, there are people who have been employed to carry out the day-to-day work. You, as a shareholder, will take part in an annual general meeting where you will be required to vote. So that is mostly how you will participate in the company after becoming a shareholder. What are the benefits of investing in shares? Well, as I mentioned, you do become a part owner in the business. So if the business performs very well, earns profit, you will share in those profits. So those profits are distributed to all the shareholders in proportion to their shareholding, or in proportion to the number of shares that you are holding relative to all the shares that the company has. And these dividends can be distributed multiple times in the year. They can be distributed 2 times a year. So the one paid within the year is called an interim dividend, and the one that is paid at the end of the year is called a final dividend. There are some companies that pay dividends 3 times a year. So you receive a first interim dividend, you receive a second interim dividend, and then you receive a final dividend. So these are ways of benefiting from investing in shares. Another way that you benefit is through capital gains. So very similar to how, let's say, commodities business works, where, for example, if you're a middleman, you go and buy maize from the farmer, for argument's sake, at 100 kwacha, you bring it to the market, you sell it at 150 kwacha, you make a profit of 50 kwacha. In the same way, when you buy shares at a particular price. Over time, the price of the share can change. It can go upwards or it can go downwards. If the price goes upwards, that price appreciation is your capital gain. If it goes down, then you make a capital loss. But this gain or loss remains unrealized until you actually sell your shares. So for example, I've bought my shares today at 100 kwacha. In 3 months time, the share moves to 120 kwacha. I have gained 20 kwacha, but that 20 kwacha is not cash realized until I decide to sell my shares, and then I actually realize that 20 kwacha. So that is called capital gains, and it is known that over a long period of time, as long as a company is performing well, the potential for capital gains is quite significant. Another way that you benefit from investing in shares is that you can actually use your shares as collateral and be able to get a loan, for example. So you can get these loans from brokers. There are other financial institutions that can also give you loans based on shares that you're holding. So these can be fund managers, these can be banks. So you can use your shares as collateral. So you continue to earn the benefit on your shares that you've bought, but at the same time, you're also able to get funds that you can use for something more immediate. Now, how do you invest in shares? Investing in shares is very straightforward. I think what has really made it easy is the fact that you have institutions that have been specifically set up to assist people like you and me to buy shares. And these institutions are called stockbrokers. Currently in Malawi, we have three stockbrokers. We have Continental Capital, we have Cedar Capital, and we have Stockbrokers Malawi. So you can contact any one of these brokers and they will be able to buy shares on your behalf. Normally what is required is for you to actually only specify the shares that you would wish to buy. If you have no idea, the stockbrokers are also able to give you advice in terms of which shares are suitable for the desired goal that you are saving for. And they are also able to monitor the market and advise which stocks are more likely to perform and which ones are probably not a very good investment at that particular time. So investing through a stockbroker is quite simple. It is also not costly. Actually, you pay a commission. So for the first 50,000, you pay 2%. For the next 50,000, you pay 1.5%. And for after that, you pay 1%. So the commission is actually between 1% to 2%. So you see that it's really not a significant amount. And I know there's a conception out there to say that shares are investments that can only be made by people with a lot of money. But actually that is not true, because you can buy even a single share. So when you look at the stock market, there are shares of different prices on the stock exchange. At 14 kwacha, you can even buy one share. So there's no one at all who is excluded from investing on the stock market. Now, if you do need to disinvest or to sell your shares, you can actually sell your shares at any point. All you need to do is go back to the stockbroker and advise the broker that you would wish to sell your shares. Now, when you're selling shares, sometimes there's a capital gain tax that you pay. And this is when you buy and sell your shares within the same year. A corporate gains tax will apply. However, if you buy and sell your shares at a period of over 1 year, so you sell them after 1 year, you don't pay any tax. And that is why investing in shares is recommended, especially for long-term investors. And this is how we wrap up our episode for today. I hope that you will start to invest on the stock exchange. Have a great day.